We're done. Summer's over, but it's okay. We got trading to tide us over for the next.
So what do we got? Sunday night, we saw the Chinese come out and announce the next big leg of their economic stimulus, which was we kind of know where do we go. We look at Aussie, we look at Kiwi, we look at some of the base metals. Copper opened up almost 2% lower last night. Copper and China having a strong correlation. China, the largest holder of copper stockpiles. So the usual suspects took a beating, which tells me today, we talk about holistic product interactions. Never a perfect thing, but I would bet a nickel we see FXI, JD, Baidu, the usual suspects, all opening lower today.
It'll be interesting because there was a little bit of bounce in FXI at the end of last week. It looks like it is going to open maybe 1% or so lower.
Yeah.
So a little bit of a mixed bag because China's balance of trade that came out last night was awful. And this doesn't, maybe it might be like, oh, Frank, you're really down the rabbit hole looking at Chinese balance of trade. This has been a huge number for China, I mean, the last several years, but especially amid the lacking economic bounce back out of the pandemic. And this number missed heavy. And now you have a bigger stimulus plan. They keep announcing whatever bigger stimulus plan.
Right, and that's the problem is that they're running out. They're going to do something for the housing market, but they're not quite sure what. They're going to do this, and they started a small fund for that. So now this is we've seen the market react. FXI almost doubled in value. Stocks, like some of the Chinese stocks you can trade here, up 30, 40, 50%. Now, FXI doubling in value from 22 to almost 38, 40, I don't know if we got to that print.
I think we have 38, yeah.
Okay, it's 80%, 85%. It's a good move in a month. Is that a huge run up to the upside? Yeah. Versus 2 years ago, we're still half of where it was. So you can make the case there's more to go or not. But we do know that markets tend to not go one way forever. So this is, I think the sell-off in Aussie is that reflection. We're getting down to some interesting levels now.
Yeah, you had the open lower last night and then a little bit of back and forth. And now getting very close to 67. I'm looking at the 15-minute chart just to look at yesterday's open. But yeah, this is where they bounced off of last week. And I mean, is still relatively expensive for the last year or so of Aussie trading. Obviously, everything under 70 is relatively cheap for the last decade worth of Aussie trading.
Absolutely.
But yeah, really interesting inflection point here. Obviously, if you were contrarian trading this run up here, you've probably taken profits at this point. I mean, this is a 200-point move from the highs.
Yeah, you've definitely probably peeled them off. And this is, again, the value of the chart is it gives you a little bit of context as to, okay, you can see we're consolidating here. The market's got to make a decision. Is dollar strength going to be what drives it below 67 cents? Is it more weakness in China? Or we've pulled back 250 points in the manner of 11 days. Mm-hmm. That's a big move in FX. It's almost 2.5%, 3% move to the downside. Is this going to be a little bit of a base that forms? And the rally continues. So it will be interesting to see whether or not we hold in here, or it's definitely, as you can see, historically it's been a little bit of an inflection point. This number could be 66.25. Don't get quite tied up in a number. This is where the chart becomes a little bit valuable. If you're not a tape reader who's followed prices for a long time, you can get a quick context. Who's going to get challenged here? Some of the longer term strategic longs. Whether or not they're going to stick with it or they're going to capitulate. And we're going to see how that plays out here. This is something I want to keep an eye on. I want to keep an eye on Kiwi too. We know there's a strong correlation there. Canada and Kiwi tend to move together, seeing the exact same setup here. Although Kiwi, again, cutting rates 50 basis points last week, brings them down to where we are, 475. Actually, a little bit weaker.
Feels weaker. Feels weak. All of that being said, Aussie still feels relatively strong, especially compared to some of these commodity currencies. I mean, yeah, Kiwi's now down under 61 and about 150, 200 pips from their lows of the last year. And just if you measure up the same chart, here for Aussie. I mean, they're still 300, 400, 500 points away from their lows, depending on where you're looking there. I also want to bring up, because this is another one that has been continuing to see damage done. Canada.
Yeah.
Holy smokes. Dollar CAD sneaky up another 30 points to start the week, trading very close to 138. And you'll remember, Pete, that for the last year plus of trading, 139 is really the high. So really close to the lows for CAD.
Now, and we talk about correlations. When oil traded back down from the high 70s to below 70, 67, whatever, we saw Canada not get that usual selling of dollar Canada. We saw a little bit, tiny bit, but we're seeing oil still hold in around $74 right now, and dollar Canada up near its highs. So this is a good case in point where there isn't a one-to-one correlation. You know, it doesn't always work through that. If Canada follows crude, it has a correlation to it. It's not 100%. It's positive, it's strong, we watch, but we don't lean on it. And that's the one takeaway here is you can't say, well, Canada's not pricing right because oil's still at $75. We're $8 off the lows. Why is it Canada stronger, i.e. dollar Canada lower? It doesn't always work that way. This is more the dollar story overall, kind of overwhelming the crude story.
Well, and it's funny.
And the U.S. rate story playing into that a little bit.
I mean, am I stupid to think that the U.S. taking more oil out of the ground in the last several years has created a little bit of a correlation breakdown between Canada and crude? Because, Pete, it's not just the recent crude action, which, I mean, of course, war in the Middle East, it stinks. Nobody wants it to continue. It's juiced these crude prices. Everybody, though, I think is of the thinking, and you know better than me, looking at the futures curve for crude, that this is short-term volatility.
Right.
It's not necessarily like a run-up from mid-60s to mid-70s with the idea that, like, crude should be priced at $80 a barrel for the next 10 years. It's short-term volatility like you tend to see in the options market around a short-term event, not sustained, fundamental changes to an asset class. So you got that going, Pete. But also, I don't know the last time we saw Canada and crude trading close to 1-for-1 with each other in the last couple of years. Yeah. Like really since the pandemic, you see crude
much more selective
higher,
push
getting
and pull.
hit.
Agreed.
The correlation's broken down.
Right. And when you traditionally have a dollar move, not just a currency specific move, this is where you see Canada kind of follow through with that. I want to look at Swiss a little bit, just because Swiss still having that flight to quality.
The dollar buying is indiscriminate to start the week, it looks like, because, dollar's up 50 pips on Swiss.
Yeah. So this is a little bit interesting. So we saw a little bit of fear come back into the marketplace around the original, the second set of attacks in the Middle East. But this pair that tends to, again, you see dollar Swiss getting sold at times of risk and stress, lower end of its range. Now we're kind of challenging that environment a little bit. Seeing this play through in the yen the same way, to a little bit of a lesser degree, but dollar Swiss right now having a hard time getting sellers out to these levels. These two charts look very, very similar. The Swiss has fallen farther faster than dollar yen has, but both of them, flight to quality wise, speak to a little bit what you're saying. Any geopolitical, you could argue, we've got two wars, major wars going on in the world right now. There's not a lot of fear out there that these spread past the borders, and you're seeing that play through a little bit.
Well, and what's funny, Pete, is I don't know if you meant to do this. These markets have a higher correlation to crude right now than Canada does.
Yes.
Like there's no coincidence in my mind that dollar is up 50 pips on Swiss and up 50 pips on yen, and crude is down $1.50. Excuse me.
Yeah.
Because fear is coming out of this, whatever you want to call it, war risk off trade that we've seen in spurts over the last couple of weeks. And Canada hasn't really had anything to do with it, but every time you see a crude oil, $2-3 rally, and you're thinking, wow, this war seems like it's escalating, you're seeing dollar get hit compared to Swiss franc especially. Not so much. The yen thing has been weird, but especially this dollar franc, and I don't think it's any coincidence that you're seeing dollar franc now bounce back to highs for the last month or so, and crude is off almost $2 and right, looking at $70 a barrel.
And we'll take a look at Aussie Canada tomorrow and take a look at some of those commodity currency pairs. Interesting, so within that commodity space, some interesting divergences. Cable, we're off for 3 handles from the highs. 134 was the high. We're down into the high 130s. Relatively quiet days, though. Should have a busy week as we unwind because we are getting to inflection points. Whether dollar weakness, this is just a pullback from a little bit of the dollar weakness we've seen the last 6 weeks, or are we seeing a change in direction trend a little bit? And what this is challenges is everybody who is short dollars right now, it's putting them in a little bit of a difficult spot. So it'll be interesting to see how the market challenges that and whether that's interest rates driving or any number of effects. And we'll take a look. Interesting to see Aussie struggling on top of getting hit on the China thing, but no talk about gold still close to its highs.
Yeah.
So as you mentioned, correlations ebb and flow. We're mindful of them, but we don't hang our hats on them. And we never use them as an excuse to stay in a position past what we'd like. But if you want to learn more about any of this, guys, tastyfx.com is where you go. We have tons of educational content to get you involved in the currency trading environment, understanding currency pairs, and a lot more information in terms of what's driving markets and where you may find opportunity in your trading style.